There is no doubt, Parag Parikh Flexi Cap is the most popular fund in India right now. In 2024 alone, investors poured in 20,020 crore rupees. This was the highest inflow among all equity funds. Investors love Parag Parikh Flexi Cap not just for returns. If we look at the past 10-year returns across all equity schemes, Parag Parikh Flexi Cap fund ranks 23. So if someone wants a fund with best returns, there are other options. Investors are drawn to this scheme because of the fund house's investment philosophy, the track record of the fund manager and consistent performance. They believe that Parag Parikh won't disappoint them over the long term. So why do investors have so much faith in this fund? Why did the fund receive the highest inflows in 2024 compared to all other equity funds? How has the fund managed to perform consistently well? Let's find answers to all these questions in today's video. Hello and welcome to 5 Minute Finance by ET Money. Here we talk about the basics of investing and personal finance. Today we'll discuss 4 reasons that have made Parag Parikh Flexi Cap the most popular equity fund in the country. Reason 1. Invests in quality stocks. One thing that makes Parag Parikh Flexi Cap stand out is its buy and hold approach. The fund manager picks high quality stocks for the long term and lets them compound over time. This is clear if you look at how frequently the fund buys and sells stocks. To know this, we check the parameter called the turnover ratio. The higher this ratio, the more frequently a fund buys and sells stocks. A turnover ratio of 100 means the fund manager has changed the entire portfolio in the past 1 year. Now, Parag Parikh Flexi Cap's turnover ratio is 22.95, which is the 4th lowest in the country. The average turnover ratio of all Flexi Cap funds is 95. If you look at the fund's top holdings, 9 out of 10 stocks remained the same in 2024. For example, Clearing Corporation of India, HDFC Bank and Bajaj Holding and Investments remained the top 3 stocks. In fact, the fund increased its stake in the existing stocks with most of the new money that came into the scheme last year. One more interesting fact about the fund. It has around 12.82% of its portfolio in international blue chips like Amazon, Microsoft, Alphabet, etc. Reason 2. Investments at reasonable valuations. Now the fund tries to buy stock at reasonable valuations. It prefers to sit in cash if it does not find stocks at desirable price. For instance, the fund held 12.4% of its portfolio in cash at the start of 2024. By mid-year, it increased to 13%. By the end of last year, Parag Parikh Flexi Cap had held around 20% of its portfolio in cash. In his letter to investors, Rajiv Thakur, who manages the Flexi Cap fund and is also the chief investment officer, talked about the cash in the scheme's portfolio. He said, "Holding some amount of cash gives us the opportunity to deploy whenever a stock trades at attractive valuations. Investment opportunities do not come every day across all companies and one has to wait to deploy money well." Reason 3. It shines during tough times. There's a little secret about the fund that no one usually talks about. Parag Parikh Flexi Cap delivers above average returns consistently because it falls less when markets go south. When the markets are doing well, the fund does not usually give better returns than its benchmark. But when markets fall, the scheme falls far less than the market. Let's understand this with data. During the past 10 years, the Nifty 500 index gave positive returns in 76 months. Parag Parikh did not beat the index in 47 of these months. So 62% of the time, it underperformed the index. Now let's look at how it fared when markets corrected. The Nifty 500 index had negative returns in 44 months of the past decade. The fund did better than the index in 34 of these months. In this case, it outperformed the index 77% of the times. Falling less in bad markets improves Parag Parikh Flexi Cap's long-term returns. This also helps the fund deliver consistent returns. This is one big reason why the scheme is so popular among investors. Reason number 4. The fund's outstanding performance. So when we say Parag Parikh Flexi Cap is a consistent performer, what do we mean? To answer this question, we looked at just one parameter. We examined the 5-year average rolling returns of the fund between 2015 and today. Rolling returns show how well the fund has performed and its consistency in generating returns over the years. Parag Parikh ranked second when we checked the data. It has an average return of 19.52%. So, if you had invested in the fund for 5 years between 2015 and today, there is a reasonable probability that you would have made above 19% returns. And before we end this video, let me tell you, Parag Parikh is also the only fund house that conducts an investor meet every year. Anyone can attend and ask questions to the management. The fund house answers every question transparently. If you want to know more about the fund, you can check the recording of Investors Meet on the company's YouTube channel. And if you want to invest in this fund or any other fund of your choice, you may go to the ET Money app and invest in them for absolutely free. We hope this video helps you gain insights about the Parag Parikh Flexi Cap fund. If it did, don't forget to like, share and comment. We'll see you with another insightful video soon.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.